The role and responsibilities of a capital market authority. The primary role of a capital market authority or CMA is to ensure that capital markets within its jurisdiction are properly functioning and that investors are adequately protected. This includes the oversight, licensing, and regulation of securities exchanges, broker-dealers, and investment advisors. A capital market authority must also monitor all transactions on these markets in order to detect any potential irregularities or signs of market manipulation. Furthermore, it must promote investor education by providing guidance regarding investing practices, as well as ensuring adequate disclosure standards for companies listed on the exchange. Additionally, it should be active in promoting good corporate governance practices among firms operating in its jurisdiction. In order to fulfill these roles effectively, a capital market authority may employ a range of regulatory tools such as setting minimum requirements for admission onto exchanges, enforcing rules against insider trading, collecting data from regulated entities, conducting investigations into suspected violations, imposing fines where appropriate, issuing public warnings about risks associated with certain investments, and suspending or revoking licenses when necessary. By fulfilling these roles effectively, a capital market authority helps to ensure that capital markets within its jurisdiction are properly functioning and that investors are adequately protected. The responsibilities of a capital market authority. A capital market authority is responsible for registering and licensing securities firms and investment advisors. This includes overseeing the registration process to ensure that all firms adhere to the relevant legal requirements, such as meeting capital adequacy standards and having in place appropriate internal controls. Furthermore, it must conduct background checks on potential licensees to assess their suitability for engaging in securities-related activities. A capital market authority also has a duty to monitor all registered entities closely in order to detect any irregularities or signs of misconduct. Finally, it is required to take action where necessary by suspending or revoking licenses when appropriate and issuing fines where warranted. By fulfilling these roles effectively, a capital market authority helps ensure that investors receive adequate protection from fraudulent activity and market manipulation, while maintaining fair and orderly markets within its jurisdiction. A capital market authority is responsible for registering and approving securities products, such as stocks, bonds, derivatives, and other financial instruments. This involves ensuring that all products comply with applicable laws and regulations before they can be made available to the public. A capital market authority also reviews prospectuses or offering documents to ensure that essential information about a product's terms and conditions are accurately disclosed. Furthermore, it must assess the risks associated with a product in order to determine whether the product is suitable for retail investors. Finally, it has the power to issue warnings if there are concerns over excessive risk-taking by issuers or market participants involved in trading activities related to a particular security. By fulfilling these roles effectively, the capital market authority helps ensure an efficient flow of capital into productive investments while protecting investors from undue harm due to inadequate disclosure standards or faulty advice regarding risky investments. A capital market authority is responsible for regulating the marketing and sale of securities products. This includes setting minimum requirements for admission onto exchanges, enforcing rules against insider trading, collecting data from regulated entities, conducting investigations into suspected violations, issuing public warnings about risks associated with certain investments, imposing fines where appropriate, and suspending or revoking licenses when necessary. By fulfilling these roles effectively, a capital market authority helps protect investors from fraudulent activity and market manipulation, while making sure that only suitable financial products are available on exchanges within its jurisdiction. A capital market authority is responsible for inspecting and auditing securities firms within its jurisdiction. This includes conducting on-site examinations of firms in order to ensure that they are complying with applicable laws, regulations, and corporate governance standards. Additionally, it must review financial statements and internal control mechanisms to assess the soundness of a firm's operations. A capital market authority also has the power to impose sanctions or fines where appropriate if violations have been found. Furthermore, it can suspend or revoke licenses when necessary in order to protect investors from any potential harm due to misconduct or mismanagement by an entity operating in its jurisdiction. By fulfilling these roles effectively, a capital market authority helps ensure that all entities engaged in securities activities within its jurisdiction are functioning properly and providing adequate protection for investors' funds. A capital market authority is also responsible for ensuring that audit reports provided by external auditors meet professional standards as well as ensuring compliance with relevant legal requirements, such as accounting rules and disclosure regimes pertaining to public offerings of securities products. In this regard, a capital market authority must regularly examine audit reports submitted by registered entities, investigate complaints regarding alleged irregularities, perform surprise inspections of certified auditors working with listed companies, take action against auditors who fail to adhere to best practices, and provide guidance on proper auditing procedures for both domestic and foreign firms operating within its jurisdiction. A capital market authority is responsible for investigating and prosecuting securities fraud. This includes reviewing complaints from investors, conducting on-site examinations of companies suspected of engaging in fraudulent activities, and collaborating with other law enforcement agencies both domestically and internationally to identify perpetrators. A capital market authority has the power to issue formal warnings, impose fines or sanctions against violators, suspend or revoke licenses where appropriate, refer cases to criminal courts when necessary, and make public announcements about investigations into suspicious activity. Furthermore, it must work closely with other regulators in order to coordinate a comprehensive approach towards addressing market abuse. By fulfilling these roles effectively, a capital market authority helps protect investors from false information or manipulation by ensuring that all entities engaged in securities activities within its jurisdiction are playing by the rules. A capital market authority is responsible for promoting investor education in order to ensure that individuals are well informed when it comes to investing their money. The capital market authority should work hard at providing detailed information regarding different types of investment products available on exchanges under its supervision, through seminars conducted throughout its jurisdiction as well as via websites. Furthermore, it should provide guidance and advice to potential investors about how best to protect themselves when trading securities products by emphasizing the importance of understanding financial statements, researching companies and markets thoroughly before making any commitments, and familiarizing oneself with the risks associated with various investments. By educating investors on how best to protect themselves against irresponsible behavior from issuers/market participants looking only after their own interests instead of those of their customers. A capital market authority helps promote an efficient flow of capital into productive investments while protecting retail investors from harm due to inadequate disclosure standards or faulty advice regarding risky investments. In addition to providing educational tools such as brochures and pamphlets, a capital market authority is expected to enforce strict regulations pertaining to corporate governance standards along with stringent sanctions designed to deter fraudulent activities within its jurisdiction. Through public announcements detailing investigations into suspicious activity or fines imposed against violators, A capital market authority sends a clear message that misconduct will not be tolerated while helping instill confidence amongst potential investors in relation towards investing money into financial markets overseen by it. By fulfilling these roles effectively, a capital market authority helps ensure that all entities engaged in securities activities within its jurisdiction are functioning properly, and providing adequate protection for investors' funds, while promoting a healthy culture of transparency where both listed companies and individual traders feel secure when taking part in market transactions. A capital market authority plays an integral role in ensuring that investment and securities markets are secure, accessible, and efficient. Through a commitment to promoting investor education, monitoring securities firms, registering products, and addressing fraud and abuse, the Capital Market Authority is expected to protect investors' interests while providing access to capital markets. It is also the job of the Capital Market Authority to ensure that asset owners can participate in capital markets with confidence. Thank you for watching. Hope to see you all on the next one.